Alright guys, so um I just finished the stream and wanted to make this video. It's a live video. Or I'm streaming it live, but it'd be raw, uncut, unedited video. Of like I'm just gonna go over I've learned a lot more than this, but just a couple quick things as far as what was really impactful to me during learning ICT stuff. So for one, we have, let me just remove all this stuff from my chart. There you go. For one, we have discount and premium, which honestly is probably one of the biggest things to learn first, is how to recognize when a market's in a discount or a premium. So for example, this is the daily chart, and right here we reversed off of this, right? Discount, it's in a premium right now. So market was premium and it wanted to move to discount. So if we move our Fibonacci here to here, and market moved to discount here and move back up to premium. So if we go like this, here to here, went back to premium here. These levels are very useful to use, accompanied with like order blocks, fair value gaps, stuff like that. So like for example, we have a order block here. So as soon as price went into that, we can look for trade setups. That's what on the daily at least. So yeah, and we're also trading. You want to know what range you're trading in. What I mean by that is what, like, to look for discount and premium, you wouldn't necessarily, you might look at this here, this price, like here, but what is this price, all this price trading in? It's trading in within this range. So any major discount and premium is going to be when price is trading within this range until we break out of it and form a new range. So, and then there's like ranges that are on the lower time frames. So like, for example, like this is yesterday's range, opening to close. That's yesterday's range. Price moved into a premium almost to the 62 and rejected. So you can have these ranges on a short-term basis to also frame trades. All right. Secondly, the second thing that was really like a game changer for me, I do intermediate term day trading where it's like very, like, I mean, I almost do scalping. But these daily time frames can form great opportunities for scalps. So let's take, like, I look at order blocks, inverse fair value gaps, all that stuff on the daily. So in this price range here, we have a order block here. And prices bounced off of it went down to the 25% retracement inside this order block. Bounced off of it, like how many times? 1, 2, 3. So there's a lot of trading opportunities around these areas. Same thing here. There's an order block on the higher time frame, daily, and this is where we made the major reversing point before going lower. And then let's take this one here. So like all these reversal points, let's do this one here. So price traded right into the 25% retracement of that order block there and drove away from it. Same here. Price went into this order block here and traded away from it. So you want to have these areas highlighted and then look for structure on the lower time frames to indicate to you that there is signs of bearishness or bullishness depending on what what PD array are you trying to use? Give me a sec. I gotta close my door. All right, so that's the second thing. So the first thing was learning how to find premium and discount markets, which is used through drawing your fib from the top of the range to the bottom range, either on the daily, the 1 hour. I like to use the 1 hour 15-minute to draw my ranges. You can use micro ranges on like the 1 minute. So like, for example, I think for me the value comes from larger time frames, but like for example here, right now this is live, so net market just moved into a discount. We're trading off of the first presented fair value gap of the day right here and right here. Price rejected off of that, so you can kind of see this is at a discounted level. All right, so yeah, I mean, I do that on the micro scale. So like for example, if let me draw out for you guys the
We're ready to go.
Okay, hold on. Thank you. All right. So we have a order block here, right? So now we're like trying to frame trades around taking buys. So let's go to the 1 minute. So like right here, we have a huge candle towards the upside, forming a fair value gap. We have equal lows resting below here, but we have a huge distribution. We have it enter into that fair value gap, and you can take a trade aiming for this buy side or that buy side. I don't know if it reaches up here. Well, it did later on during the day, but so stuff like that, looking for signs of bullishness or bearishness, depending on what the larger time frame Peter is. So it bounced off it there. It also bounced off of it here. It's a huge distribution out. We have a fair value gap here. Didn't take the trade here. I think actually yesterday I did take this trade. I don't know if this was what I was using, but yeah, I took the trade right here. So yeah, so higher time frame PD arrays, you can look at market drawing down into those areas as a draw down, take out liquidity, and then drive it up. And these would be high probable trading entries because you're using higher time frame PD arrays paired with lower time frame PD arrays that would show signs of confirmation that this one was valid. So that's the second thing. So the first thing was how to identify if a market's in a discount or premium using using the Fibonacci. So you got the 50% retracement, the 62, the 79, and the 70% retracement, which is the optimal trade entry in the model. So that's kind of how I identify whether market's in a premium or discount. And then the last thing that I wanted to talk about, and just talk about three things. The last thing I wanted to talk about was how the sessions work. This was a big game changer for me as far as predicting price or expecting or preparing. I don't know what the right word is for that, but so if we are trading down during London, right? We're bearish during London. I can expect New York to try to take a reach for that liquidity that was building in London session. And likewise, let me see if I can find an example. So, for example, this during London, it was trading higher. During London, we have a gradual slope higher, and we would expect New York to be taking out liquidity from London, and then maybe even previous day, since we were trading higher at the end of previous yesterday's price action. Here we traded lower, 7 o'clock, comes around to 9 o'clock, we take out London, liquidity from London here. We didn't take out that, but we did take out some liquidity here and here on New York open, traded back down, traded down again. But yeah, that's kind of how I'm framing how I frame my trades a little bit, is looking at previous session, and those are the targets that I'll aim for from previous. So like, for example, this is going down during London, 7 o'clock. Sometimes it takes it out at 7 or 8 o'clock, and then we'll see a drive down, but it really depends on what time it takes it out. Because if we have if it takes out London's liquidity 7 to 8 o'clock before 9 o'clock, then we could see 9 o'clock open drive the price down. But if liquidity is not taken at 9 o'clock, then we could definitely see it drive out to take out London's liquidity. So likewise, this one was trading up all day, 918, 928. We went down to take out all this liquidity resting below here, right? Let's look at this day. So this happens every single. So yeah, trading down during London. So what do we expect during 7 o'clock to 9 to 10? We're expecting it to reach for that liquidity resting here and here. What does it do? 7 o'clock, 9 o'clock to 10:30. We finish out taking out liquidity here from London and then trading it lower. So you can expect price to try to take out liquidity from London session, and then during your afternoon session, sometimes you can see a reversal on liquidity built from New York session. So, and sometimes those retracements during the afternoon are not like big. They're pretty small, but yeah. So that was the 3 things. To recap, the 3 things. How long is this video? Really long. To recap, 3 things: how to identify discount, premium, how the sessions work, what you should expect in price, which was the 3rd thing. And then secondly is how to look at higher time frame PD arrays to frame your larger scalping trades, to frame movement trades that are really gonna find an area to move off of, and how to frame that trade paired with lower time frame PD arrays to give you confirmation of the move. All right. So I didn't really talk about order blocks or fair value gaps. I kind of talked more about the general principles. And then time, and time does come into play when it comes to, like I said, the New York sessions, I guess you could say, come into play as far as when it wants to take out liquidity from previous session. So, all right, guys. Well, that was it. And